Welcome, everyone. This is Alnoor Bhimani from the SDSB, the Business School at LUMS, and we bring you another offering in our conversations with Changemakers. Today, we have a real changemaker in very many ways. So welcome all. I'd like to introduce you to Sima Kamil. She's known to many individuals who I know are watching us right now. Sima Kamil is, of course, a deputy governor of the State Bank of Pakistan. She has been in banking for perhaps up to 4 decades. Sima Kamil was educated in the UK. She has an MBA degree from City University in London. It turns out she also has an honorary doctorate from Kingston University. So perhaps I should really be calling her doctor. But a great pleasure to have you here. Of course, you've worked with very, very many sort of institutions in finance, from American Express to ANZ Greenlays to the Habib Bank, and you've been the CEO of United Bank. You have a string of experiences, both with Pakistani banks and foreign banks, so a wealth of experience. And in this conversation, I'd like to ask you actually a wide number of questions around very many topics, and the audience themselves will be asking you questions. So I'd like to really, focus on a variety of issues. It has to do perhaps with your thoughts on gender balance. I'd like to ask you about business education generally, about the sorts of graduates that the banking and financial industry are looking for, the startup and entrepreneurship set of issues that are unraveling in Pakistan. So we've got quite a lot to discuss. So great pleasure to have you here, and a great pleasure to be joined by an audience. I know very many are students, some from LUMS and some from outside, and we're joined by others. So welcome all. And I'd like to ask you a first question, which relates to, I know, something that is quite close to your heart. Very often when we read about you in the press, you're kind of thought of as being perhaps, the first woman in Pakistan who is at the helm of a bank, or one of the most powerful women in business in Pakistan. And that rhetoric says something about gender balance, or perhaps even gender disbalance. There may come a day when we get to a stage where it becomes irrelevant whether you're a male or a female. What do you think needs to be done between now and getting to that stage?
Thank you, first of all, Dr. Bhimani, for the introduction. And it's an honor to be here. It's always an honor to be invited by LUMS. It's such a premier institution. And also, I'm very grateful to you for giving me this opportunity. I think while being talked about often is an honor, and also becomes an obligation in some ways to try and be this role model, it's also sometimes a bit, shall we say, it does show the gender disbalance. You're very right. And then sometimes you get a little bit, you don't want to be rolled out every time a woman who's successful, apparently successful, is mentioned. So it does certainly reflect gender disbalance. What will it take to make it an ordinary event? Time, mostly. It's going to take time, because this is true all over the world, actually. It's not simply an issue of culture and an issue of Pakistan. Everywhere in the world, particularly in the finance sector, anywhere, women hit the proverbial glass ceiling for a number of reasons. I may not necessarily feel that in my own career it's been such an issue, but it definitely is one. So what will it take? It will take time, and it will take a critical mass. So what I'm really quite happy about is, while Pakistan is far from having that critical mass, I think it is certainly developing, particularly in banking, certainly in our teaching world, maybe not in academia at a high level or in higher education. But if you look at, I have a theory that it's women largely run this country, but are unrecognized. So yes, you may not see many apparently there, and that will be a question of time, education, mindset changes, economy. But in reality, they do run vast amounts of this country. Agriculture, in my view, is largely run by women. Our schools are run by women. Our hospitals are largely run by women, but we don't just recognize it. So that happens, but unfortunately, it's only the top that gets looked at. So there is a gender disbalance. It's going to take time, mindset changes, and a critical mass that's needed. And I see that everywhere. Young women are coming in. It is making a difference. So I'm optimistic about this.
Thank you. Thank you. That's very useful. I want to explore this issue a little bit more. So, the idea that women essentially run very many institutions, but typically in silence. And maybe
Yes.
That is the gender quality, being silent, but doing rather than speaking, and either doing or perhaps not even sort of doing so much. And it seems to be quite prevalent in very many countries. And you're absolutely right. It's not just Pakistan. Interestingly, at the business school, we started a scholarship whereby every woman who is accepted on one of our master's programs gets a 50% scholarship. And immediately we've seen a massive impact of that.
Yes.
Of course, greater take-up of classes and cohorts across the MSc or MBAs or executive MBAs by women. And one of the interesting outcomes is that the discussions in the classrooms have changed. And we find that silence elements of leaders has now become more vocal and is changing the very notion of leadership and change. And I wonder whether you might comment on that in other spheres outside academia, whether you've seen that taking place as well.
Yeah, so there's two parts. There is women are socialized often not to speak up very much. And to be very honest, men also try to, very simply, if you're in a meeting and there are 2 or 3 women or 1 woman and a number of men, and if the woman speaks up, men will tend to speak louder and a little bit more louder and tend to ignore the voice. I think that is where a conscious decision is taken, that it's not necessarily right to always push. So the nature of the organization also has to change. So there are 2 aspects to this. Yes, women should speak up. Women should be encouraged. And that maybe starts when they're 7 years old, more than it starts later in life. But also organizations have to accept and understand that a lot of what is said, because of being pushy, aggressive, and speaking up, is often hot air. And that the silent person very often keeps quiet, watches, and then comes in with a comment that makes all the difference. So I think you may notice that in your own classroom settings, but you tend to find that as more women come into the organization, not only does the woman change, the organization also has to change. So I've become very much a believer in organizations having to change rather than women turning into men. I think that's very important. So, when I was first, just anecdotally, when I first got into banking, I did not get my first, what I thought I deserved a promotion, and they did not agree and they didn't give it to me. And I kind of burst into tears, right? And I was told, but no, you don't cry at work. Well, why not? So I think the organization has got to change and become more feminine in its outlook, rather than turn the women into men. I think that's very important. And I've over the years learned that. I've spent a lot of time trying to be more male, but I think that's got to change.
That's very, very interesting. Absolutely fascinating. I think if women across the board became more male, in a sense, at least in their characteristics and behavior, then you would have much less innovation. And that's something certainly that we're going to explore later on. But one of the issues that interested me is that you've embarked on a number of projects. Initially, I think at the Habib Bank, but certainly at the State Bank of Pakistan. And these are projects to enhance the participation of women into the banking industry, but also having a greater say once they've joined that industry. Can you talk a little bit about some of these initiatives?
Yes. So when I first at HBL, we went through a period, and I have to say that HBL is very, very keen on gender inclusion. And we then explored that as to what it might mean. And of course, there's a customer-facing aspect to it, and then there's an internal aspect to it as well. And putting all of those together, and then we worked with some international entities as well, particularly the IFC, and also with an institution called Global Association for Women in Banking, kind of thing. It's called GBA. And then we went through a program which ended up with this. It's not quite a product, but it was called NISA, right? Which was for women, but internally we had to change ourselves. So it actually began with gender sensitization training, right? Which was for men and women, and it was compulsory for each person in the bank. And the bank has got an employee workforce of thousands, where they went through at least a day and a half program to actually understand their unconscious biases, because those are always there, and to then understand what they need to do differently when they work with women within the workplace and to work with the woman customer. And then that led to the launch of this NISA product. And then we had to do some very different things too, because for example, people thought that women's banking was not a commercial proposition, and it was CSR, which it's not. And so we had to run through programs to show that actually they save more. They are just as profitable a customer as men, but it was not accepted. I had to push that. I actually had to, I ran the branches at that time. There were about 2,000 branches, which was a large part of the bank. And we had to actually say that, okay, if you open a woman's account, you will get twice the number of points when you do your scoring, performance scoring, than if you open a man's account. And that actually, so at times you have to force the change because it doesn't often come naturally, and they just listen and say, yeah, okay. I had people telling me, if you go to 25% workforce, the bank will shut. So there's a bit of forcing, but there's a bit of that too. I can also talk about what we've been doing at the central bank on this.
Yeah, please, yes.
It's actually been in the making, and it would be wrong for me to say that I take credit for that. Okay, I came in towards the end part of it and modified it a little bit, but that's our policy called Banking on Equality. There's a gender gap in financial inclusion of women, right? And that gap is not narrowing. Women simply do not have bank accounts for a number of reasons. And so we have now decided, and we've got 5 pillars to this banking on equality. We've gone through immense consultation on that with all kinds of domestic, not just banks, but NGOs, MFIs, women's leaders, women's groups, as well as offshore. And I think hopefully in a couple of weeks, we will now launch it. And the critical part of it, I mean, I won't go through all the 5 pillars, but the critical part is, one, we will start mandating. It's prescriptive now. Banks will have to have within 2 years at least 20% of their workforce as women, right? We will also prescribe that they apply a gender lens to all their products and services. What happens is, and I don't think there's any element of, chauvinism in that, but it's simply that when they look at a product, they design it, men designing for men. They will not look at what a woman customer may want. So that's the other thing we're going to do, is that they have a women's unit. They look at all products and services through a gender lens. And we then assign targets for the number of accounts that they will open for women. And then obviously the gender sensitization training and all of that. And then gender benchmarks. We are about to commence or have started the groundwork of some work with the Gates Foundation and Stanford University to then set these benchmarks to measure how this program is doing. Because in the end, when we have all this policy and the impact has to be measured, is there true financial inclusion? Do people really buy in, or is it again a tick box exercise? So that's part of it. But this, and then we'll have women champions. So these are the main aspects of this framework. And most importantly, because to measure impact, we have to have data. And we do not really have gender disaggregated data. And that's a challenge in most countries. So if you asked me how many women have got digital accounts, I can't tell you, because banks are not collecting that data. So then we're going to mandate that, because there's no point in having this policy if we can't do an impact analysis. So that's the banking on equality policy. But I have to say that the team at the State Bank, and as both men and women and the governor, really keen on this. And really, we've spent a lot of time and effort on this, and hopefully it will pay dividends. There may be it may be controversial that you're forcing it down. But I think there are, and I won't mention them, there are banks that have unwritten policies that they won't have women working in the workforce. So the range is huge. Some are only at 3% women. The average in the world, even in countries like Indonesia or Turkey, similar countries, is 65%. So I think something has got to change there.
Yeah, very, very interesting. Absolutely fascinating. And it's interesting that, one has to mandate change that seems pretty evident as something that society should move toward in any case. And quite interesting that, you take a business perspective on the idea of using performance measures to enhance social equity, which is absolutely fascinating, very interesting, and obviously it's making some positive changes. We've done very similar things at SDSB, where you have to have certain incentives for people to understand that change is actually quite easy to make, but it needs to be signaled properly. Yes. And performance measures certainly is one approach to doing that. Just very quickly on this issue, very often it tends to be women who speak in favor of gender balance. Have you found that to change? I certainly have, but very, very slowly, where men start to speak out in favor of a more balanced environment. But what are your experiences in that sense?
Actually, more men are doing it now from the heart. And you will be surprised, very often, there is a notion that it's the Western liberal man, Western educated liberal man who will do this. But actually that's not true. In my experience, I've often found that very often it's the more conservative men who will be perhaps more open. I've actually found that in my own personal career, as well as in other areas, that they will be more open to this and less, they don't just write off women quite as easily. And there are many so-called educated Western liberal men who will actually be quite sexist as well in many ways. So it's actually all parts of society, men are more open and amenable to this now. And some of it comes from the culture of respect, because in the end, it all boils down to respect, not objectifying women. And that's something that all societies are prone to, right? They're objectified. But the respect element, to be respected as an intelligent human being and not objectified, is really important.
Absolutely. Well, fascinating. I'm sure very many agree with you on that point. But I wanted to turn down to something that seems to have taken the world by storm. And this is the idea of cryptocurrencies are perhaps a good thing, changing societies and so on. About 80% of central banks today seem to be exploring the idea of, basically a central bank digital currency. And
Yes.
there's all sorts of issues tied to that. On the one hand, you could suggest that especially emerging countries have the most to benefit because it enhances the idea of financial inclusion. You find, of course, countries like Japan or India or China or the US or even the whole of Europe is looking at it, but with extreme caution. And I wonder
Yes.
whether you can say a few words about the stance of the State Bank of
Yes.
Pakistan on this.
Certainly. So one thing that often happens is that people confuse the central digital currency with the cryptocurrency. They're completely different things, right? The cryptocurrencies are, and now there's a huge debate, but they are digital assets and they're also means of payment. But those are your bitcoins and so forth, which are currently, as we stand, extremely volatile, extremely speculative. And those are not a central bank currency. Those are differently done, completely different. A central bank digital currency is something that many central banks are looking at, including ourselves, and it's very initial. The only place that we are aware of where it has actually been rolled out is in certain limited cities in China. No one else has really rolled it out, and that too is a, what shall we say? It's sort of like a sandbox, right? We're testing it out. We are also looking at it, and we talk about it. Whatever we do in the digital space is driven by one primary objective, which is to increase financial inclusion, right? And to create customer convenience. So therefore, uh, cash has, I often tell people this, cash is very elegant in some ways. It's also cumbersome, it's expensive, it's anonymous, which is good and bad, and we don't have a documented economy. So in that sense, yes, having a central bank digital currency would assist. However, we have to look at there are many ways of doing it, right? So it's actually a form of payment, right? A central bank digital currency to replace the paper money or to run concurrently with paper money. So it's a payment system. So we've got to first look at our own payment systems and then decide whether a central bank digital currency will add value. So we have a robust payment system, which is, of course, what we call the RTGS or PRISM. Now we've rolled out something that you may have heard about, which is called RAS. We call it RAS because it means the right way in Urdu. It's an instant payment system, and that's being rolled out. We've got it for bulk payments, government to person. We will now do it more person to person, and then we will do the request to pay and the merchants. At that stage, one has to decide because there is an overlap between payment systems and a central bank digital currency. So at the moment, we are, of course, exploring it. But, when you say exploring, it doesn't mean it's going to come tomorrow. There's a lot to consider. Now, there are models in a CBDC. There's a model that says that the banking system is not involved then when you have a central bank digital currency, right? So your account, for example, your funds will then be with the central bank. In which case, if you choose that model, and I'm not saying that we haven't got to a stage of thinking it at that level, that means then deposits from the banking sector will leave, go to the central bank, and then what is the effect of that? So there's a lot to consider, and that is why a lot of banks are still, central banks, governments are just considering it. What happens on the foreign exchange side, the flow of money across borders? So all of that is to be considered. It's something that is very interesting. But having said that, even in the advanced economies, it is being done with caution. but it's something we're certainly looking at. But, you know, it's not a magic bullet. I think that needs to be understood. But it's very good because it will allow us to document the economy and increase financial inclusion. So if people start paying through any means, through a payment system, they pay digitally, and they start to form a credit history, and you can lend to them more sensibly. So everything has to be driven by financial inclusion and consumer protection and security. That's really what is important.
Fascinating. I think that's a good perspective on Pakistan's stance on this. There are countries like, for instance, India would say, okay, we have to be very, very cautious about the whole idea of cryptocurrencies, which can then becomes a means of payment, but it becomes decentralized and it's no longer within the sovereignty of the state to control. And I think this is a very big issue. On the other hand, a place like India is also saying, unless we provide some fodder, some kind of incentives to grow the idea of cryptocurrencies, if we don't do that, then we're going to be left out of technological advancements. Blockchain technologies are moving very quick. So they're grappling with this notion that, do we stay at the helm of, technical knowledge bases, and at the same time limit certain things because they may run away, and once a genie is out of the bottle, it's very difficult.
That is why we are always open to conversation. Always open to conversation. We have taken a view on cryptocurrency that it is speculative, highly volatile, and most of our financial literacy is very low. So we have a duty to protect our consumer. That also is a duty. But certainly when people come and talk to us about this, we are very open to discuss it. We are very open to listen to ideas and how one could work on it. So no doors are closed.
Yeah, that's good. That's very good. Very good, Chiro. I wanted to stay not exactly the same topic, but the notion of technological advances, especially the use of digital technologies, because of course financial institutions are privy to a wide range of possibilities to offer new products, to enhance financial inclusion, and to work on data in certain ways. So a central bank, for instance, could look at big data and could sort of suggest that enhances its ability to come up with policies, to look at the impact of those policies, to assess the myriad of data forms in order to basically better manage. On the other hand, there's all sorts of other issues to do with protection, with security, with who owns the data. And can you comment a little bit about some of the issues that you're grappling with at the central bank?
So they're very, you use the word grappling, but actually it's very exciting. Yes, there are always arguments on both sides. For example, one of the things that we are looking at, and we formed some groups as well, to look at this in greater detail, is open banking, right? Which addresses and talks about the issue of who owns the data, right? So is the data, since it resides in a commercial bank, is it the property of the bank, or is it the property of the customer, right? And what value addition is the bank doing to it? So open banking, and there's been a lot of work everywhere on that, and we are also working on that, it would allow permissioned access to data. So if you or I gave, and it's very important to have permissioned informed consent. It's very, very important, because a person may not just, how we do that, we accept all terms and conditions, right? And we do that just to get ahead in, I don't want to look at this anymore. That's what we all do. So very importantly, if you give permissioned informed consent to your bank to share your data with a third party, who would then build standardized APIs and offer you a service or offer you something, for example, very simply help you with your tax return. They're a pain for everyone. You have to go to the bank, get statements, give it to the man, explain it. Well, perhaps there's an API or an aggregator which would allow your tax consultant, you will give him permission to access your data and help you with your tax return. Or, for example, very simple, even without consent, it would allow you as a banking customer to shop around. So there would be an aggregator that puts together borrowing rates, puts together deposit rates, allows the customer to choose. So those are many things that you can do with open banking. And that I think is going to be something that we would move on much earlier than, for example, CBDC. So those are the data things. And banks are working on data too. Data, but of course, you've got to have security. You've got to make sure that privacy and confidentiality is protected, and that the APIs and the third parties don't misuse the data, because that's all part of consumer protection and privacy and all of those things. So yes, we have to build those standards, those legal frameworks, which would help us to do this. So we will probably take a phased approach to that. We will start out with where consent is not needed and then move towards the consent. It's very important for SME lending, for consumer lending, for particularly those who don't have a formal income. So there are many third parties who could build APIs, but we have to standardize the APIs. So there's a lot to be done. It's exciting, and it's actually going to be one of the big areas that we're going to look at.
Sure. Yeah, that's very, very interesting. I think it turns out in very many countries and very many contexts, those who need to be financially included are the ones that are being targeted for their data. And I wonder whether you might find, very many instances where, especially in Pakistan, earlier you talked about digital awareness. Those who basically need borrowings, those who need financial services, are the ones that are going to be targeted by organizations that will simply harness their data. And I wonder whether you think that situation is a little bit more extreme in Pakistan because of that huge divergence, between those that are sophisticated enough to understand what they're signing and those who desperately need the financial. And I wonder whether you can comment a little bit on how you're tackling that issue.
You see, so that is the issue of the ones who are in desperate need to become financially literate. The issue we face, for example, and then they think it's central bank or banks, anyone phone, very often, even people who are educated, but you can be educated academically or in the area of your knowledge, but you may not be financially literate. And you got somebody calls you and says, give me this number, I'm calling from this bank, and they will do it. And that causes a lot of heartache and fraud and so forth. So we have a financial literacy program running. And that is where there are many ways that one can improve this. For example, you do an awareness, regional awareness. We do callbacks. For example, that if someone is asking you for this, there must be a callback. But then again, at for example, the rural level, we will have to build financial literacy. So we have a literacy program. For example, in the next 2 years, we are going to train about 1 million people. And that is something we do in conjunction with the banks. Half of them have to be women. But the issue with that is, how does it translate into inclusion? So what we do at the end of those programs is, and we go out, we try to engage them. We used to pre-COVID have street theater and videos, and we do it with children, with young people, because the young people will be far more savvy on this. But on the other hand, when they open accounts, the majority, 50% go dormant. They do one transaction. So we have got to ensure that there is something within the banks that is actually of value to those people. And that will in the end have to be lending, because that's what they need. If they have a 30,000 rupee income and they can keep it, you may pay it into a bank, they will withdraw it immediately or in about 4 or 5 days. And that's the end of the banking included. But if they understand that with that, and I think the telcos are working on that, and that they can actually get if not top ups, they can start to actually qualify for loans because they're developing a credit history. Then that becomes, that's where the inclusion will actually begin to happen. Access to credit, access to finance, that will actually make the difference. Or savings products, which
Sure.
actually are meaningful.
Yeah. Yeah, yeah, very, 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 very useful, very interesting. You mentioned very briefly, pre-COVID kind of education. I wonder whether you can comment on the extent to which you've seen the pandemic changing the way in which individuals might use financial institutional services, and also maybe the sorts of red bells that you might see as being part of that pandemic in terms of using financial services, accessing data, having the availability of loans, and so on. And what you see as a change that's taken place because of the pandemic?
Well, I think it's all over the world, but particularly in countries like Pakistan, we've seen a double or tripling of digital transactions, actually. Whether it is, and we took some proactive measures, for example, funds transfer, digital transfer between customers free, for example. But other than that too, the convenience has now been understood. So both banks or everyone, we have seen e-commerce transaction going up, mobile banking going up 150%, hugely. I can speak from my own experience when I was at UBL, and that was just at the beginning of the pandemic. We saw almost a dramatic shift in people using digital apps, for example. People just did not bother, they just went to the bank. Now they understood that it was not just the safety aspect. What happened is that banks too began to push it much more. And then people, once they were actually hooked onto it, they understood the convenience. So it became very much simpler to do. So I think that has changed, and I think that's changed for the good, and I think permanently. We will have to keep working on that, but I don't think people will return quite so easily to bricks and mortar banking. What we have to do is to take it's happened more urban, right? Or what we call tier 1 and tier 2 and tier 3, the larger urban centers. We have to take it into the greater rural space. For example, using the SRS programs, right? To actually promote financial inclusion and actually open accounts rather than just draw cash. So that's changed. But on the other hand, yes, we've taken a number of measures because the pandemic I think actually, and then fingers crossed because we're in the third wave, Pakistan, from a health perspective and from an economic perspective, has actually handled this well. We have not had mass lockdowns, except right in the beginning, even in the third wave. Industry has not closed. What has suffered possibly is part of the services sector, maybe more in the informal economy. But as you've seen with the growth numbers, it has not impacted growth now. So I think both the health crisis, so far, it's an uncertain situation, clearly. And we know that, numbers had increased and so on. But we've not had closures. And we've taken a number of steps at the central bank. We did a refinance for wages, and 1.6 million jobs were saved, in our opinion. We also promoted investment because investors became a little shy because obviously they didn't understand where things would go. So we went into a what we call the temporary economic refinance scheme, TERF it was called, where we actually have banks, and the risk is the banks, but we provide subsidized loans for opening of letters of credit, inland or outland, so that there's no misuse. And they get loans very, very cheap for a long tenor. And because of that, approvals have been up to 1% of GDP. So those are big numbers. And I think all these measures and the government's handling of the health crisis so far has been quite impressive, frankly, so far. Let's hope that it continues in that way. but so far it has been impressive.
Great. Well, thank you for that. In Western countries especially, governments have stepped up with central banks to essentially make life easier for those who've lost their jobs and so on. And there's been sort of massive debts that have been kind of incurred. And now I think the fear is somebody has to repay those, and there's going to be inflationary pressures. Can you comment on the situation in Pakistan, the extent to which, one needs to be very cautious about, future growth in relation to what's happened during the pandemic and trying to service debt that's accumulated over that space of time?
Yeah, so what we did was earlier when COVID first came in around March of last year, we worked closely with the banks, and particularly for the underserved areas like the SMEs. It was the bank's decision, but we did some work with the banks to restructure loans. There were either the banks did a restructuring or a deferment of payment, right? Because obviously if there was prolonged lockdown, either you would get job losses. So we had the Rozgar scheme, which allowed those companies who would retain people cheaper sources of funding. And then we also did this work on allowing those customers who qualified and needed a little bit of deferment, and it's called, forbearance. In the banking world, forbearance has become very important. You just don't demand your money without thought, right? So I think the banks actually worked with the central bank very well and did that. So there were up to 6 months or 1 year deferments of payments of say principal. And of course that will play out in the exit. And, if this third wave is controlled and we don't have more lockdown, then we will hopefully be able to see a less of an impact on debt repayments capacities.
Very interesting. Very good. Yeah. Okay, good. So we have a question from the audience, and this relates to individuals wanting to join banking institutions. What is the ideal educational background today that they might want to essentially partake in? And how has that also changed over maybe the course of maybe 10 years? What is different today?
So there was a phase where if I go a little bit way back, earlier in the UK and so on, and there was, the fashion banking, just like everything else, goes through phases, right? And something becomes very popular and then goes away. So the fashion was investment banking, and everyone wanted to be an investment banker. And if you went to the UK, that was very Oxbridge, right? So you often had people with English degrees and history degrees from Oxford or Cambridge, and they became investment bankers and very successful. Then we went through a phase of the business school thing. And in Pakistan, for the most of my career, it's always been MBA oriented, right? For certain levels of job, which is the management jobs. And so everyone had management training programs, which they still do. And it was always the MBAs coming in, right? And then you had other roles that were okay for graduates, and then a number of roles in that. But talking to your audience, it was MBAs. I'm beginning to see signs of a shift there. Some signs of a shift. Because banks are now much more, for example, they need people who can do digital, who are innovative, because that is what a bank's largest spending is HR, but then it's IT after that. Huge investments in IT. So you need people who can actually work with that, who are IT savvy and IT qualified. That's become very important. What has also become important is people who can think logically and work on the operation side of a bank, right? To become more efficient, right? So how, for example, one of the classic issues a bank faces is how to handle the amount of cash it's got in circulation, There's a huge amount of cash sitting in branches, huge amount of cash sitting in ATMs, a huge amount of cash being counted and put together. And that is a non-earning asset, frankly, right? Because it's not invested. So there is a lot of work needs to be done. So people who have who can do MBAs but have a focus on operations management. So sometimes we've thought, when I was in my previous two roles, let's get maths graduates. And not because we want them to do maths, but there is an ability there. Let's get engineers, because they have that capacity to think in that logical way. So I think that will need to be built into business schools as much as possible. Data, analytics, how they can work with big data, both data governance and analytics and data lakes and all of that. So to understand your customer better. So those things are going to become more important than, say, a marketing MBA in many ways, or even a finance MBA perhaps. So I think that shift, while they're still very business school focused, there will be a need for business education either to transform itself a little bit towards those areas, or financial institutions will turn to those areas as well. So that's, I think, a shift that I'm seeing.
Great. I think that's very useful indeed. And you may know, and I think the audience will be pleased to learn that the business school is launching actually a master's degree in financial management from the fall. And it has echoes of exactly the same kind of expertises that you mentioned. We would certainly have courses in data analytics, even blockchain technologies, artificial intelligence's role in dealing with financial matters. Traditionally, our MBA program has drawn a lot of engineers, so quantitatively inclined individuals. Talking to other people in other business schools, deans and educators and so on, what I read is that there is a small transition towards individuals understanding the interface, let's say, between data analysts and decision makers. And so we need to basically train individuals who have a foot in both places. One, which is a quantitative understanding, but the other one, which is a qualitative ways in which you might represent insights, directions, strategies, and so on. And I wonder whether that is something that you're also seeing, the ability of business school graduates to be able to confront the needs both that may be technical as well as more kind of business oriented, because decision makers may not be able to interface with the more technical elements of how business is. You're finding that as well?
That is definitely needed, because when you have, and I guess most of your student body is ambitious, right? They all want to become C-suite or CEOs, I'm sure, right? That's how they aim. That's why they're at LUMS, or perhaps they want to be entrepreneurs and that sort of thing. So the link between a techie and a board or a business manager and the language they speak is very important. So an understanding there needs to be developed. Very often, because I don't come from a techie background, I first, when you're early on in your career, you don't dare to ask. And then you have to say to them, okay, can you explain this in simple English and get away from the buzzwords, and becomes much easier. So that interface, to develop that and to be able to then go to boards and senior management and get the budgets you want and to invest them and to say, okay, you're going to have to see this for a little bit of time before it yields, but it's worth the effort. That's very important. And so the ability to balance short-term gain and long-term investment, which is always a challenge in any commercial organization, that skill set is definitely needs to be developed. So there is, while I spoke about quantitative skills, communication skills, very important, and also what we call EQ, as you move higher in senior management, to balance the different personalities that you're dealing with. That skill set perhaps can't be taught, I don't know, or perhaps it can. But as they move more senior, I mean, my time as CEO was more managing people than actually the, managing differing interests within the people who report to you, managing egos, managing personalities. That becomes far more important the higher you go in an organization.
Sure. Yeah, no, you're absolutely right. That's just not financial institution. It's pretty much every institution.
Everywhere, yes.
No, absolutely, absolutely. In a sense, the business school at Lungs, I think, has invested from the outset very heavily into education that is interactive, so case-based discussions and so on. And we do often find that individuals who come in from an engineering background, maybe there's an element of self-selection that they want to be techies, and then they get interested in business, so they want to do an MBA, but they feel that we've just put them at a deep end where they have to basically interface and interact and make presentations and so on. And that's always an uphill struggle. But, I think within a short period of time, they know that if they don't do it, they're not going to be here any longer. And so they adjust. But you're absolutely right. I think that's essential. But the other thing is not just communicative abilities, but as you say, an understanding of the politics, the organizational culture, how to manage egos, as you put it, and so on. And these are skills, absolutely crucial. So that's very, very good to know. One of the things that I was interested at that you mentioned is that most people seem to come to business schools primarily because they want to be CEOs and presidents and in the C-suites. But what I found certainly at SDSB, 4 or 5 years ago, most students would say exactly that to me. I'm here because I want to join an organization in Pakistan or more likely abroad. I think now that is changing. And at least 1 out of 5 students seem to tell me they want to be engaged in a startup. They want to basically manage their own organization. And I wonder whether you can comment a little bit about the hurdles in terms of financial institutions, or maybe the facilitative steps that are being taken to engender a more entrepreneurial society in Pakistan so that these individuals can actually succeed.
Yes. So there are 2 aspects to this. One is training, right? For example, I mean, I'll focus a little bit on the women's programs, and we've got women's programs for women entrepreneurs, right? And these can be small, very small, and then they can be very large. The important thing is how you can be an incubator, right? And we talk a lot about that, and how you can train them without killing the passion. I think that's really because an entrepreneur, if you tell them and you send them to a bank to be trained, the bank will be so focused on the risk, right? And the things you learn. Well, 9 out of 10 new businesses fail, and that's a complete downer, right? Because you tell this to somebody and they say, okay, fine. So you've got to find other ways of doing it. And I'm glad to see, and I think in the tech space, and that's, I think, what may be attracting a lot of your people. Because in the tech space, yes, they are coming in and we're seeing them, we're seeing young people. Banks, financial institutions, central banks are not very good at this, to be honest. We are trying now because we're going to have an innovation office now within the central bank, and we're working on that, where we will want people who are going to have ideas to improve, and our aim is obviously financial inclusion, but other ideas too, to get the basics of a business, and then to be able to sift the ideas as well. People, and some people have such wonderful ideas and ways of doing things, and they are not literate. So that's the balance, I think, that's needed for entrepreneurship. So I'm glad that you've got people who are interested, and then you can, but I've always struggled to understand how you can teach entrepreneurship. It's a question I really have more for you as to how you actually teach that without hemming everyone in, because it is a risk-taking proposition at the end of the day.
Sure. Yeah. No. Absolutely. I think entrepreneurship is people often say, what sort of personality do you need to be a successful entrepreneur? Most studies would suggest actually a multitude of different personalities can achieve success in entrepreneurship. But I think certainly at SDSB, what we try and do is to make it very applied, very practical, numerous case studies of both failures and successes, and simply expose individuals to different possibilities, and the idea that innovation and pushing the boundaries of something, takes a different skill set and effort from just making business decisions in a ready business. And I think if we can transfer that, then that's very, very useful.
And I think young people are different now also.
Yeah, totally.
So they're not, when we were brought up, we were told, okay, as I was mentioning before we began this, I wanted to study either development economics or I wanted to do literature. But I was told by my parents, well, we can't afford to send you overseas to study that because, what are you going to do after that, right? But now young people have many more options, right? So and they also are less bound by this desire to be then in the 9-to-5 world very much. So I think that is also why that their exposure to the world is very much different. And I think, yes, some of them it will not work out, but they're much more ready to do things along with their own friends of their own age and do these things. I think that's good and exciting. I think it's great.
Sure. Yeah. No. Absolutely right. It's just in relation to that, what we've also found is that, entrepreneurship is really about seeing the potential of something that others haven't yet seen.
Yes.
So finding voids, and very interestingly, women who've played a lesser part in business are the ones who are most insightful about finding those voids, about finding those spaces that haven't yet been commercially kind of inhabited. And it's fascinating how women have, the wherewithal to succeed in entrepreneurship, and putting them through our program. We're very closely associated with the National Incubation Center that's becoming very close with SDSB. And we're finding that, women are being sought after by venture capitalists who are looking for individuals with ideas that are not kind of mainstream, that are off the beaten track. And so I think we may see a lot more women if things open up, becoming entrepreneurs and successfully basically exhibiting things that others haven't been able to see. And of course, banking institutions are hugely important in making that happen.
After a certain stage.
Yeah. We're running closer to the end of the conversation, unfortunately. But I did want to ask you a question, which is that you've had a great career. I think you've mentioned once or twice that at the outset you basically stumbled upon banking, but that wasn't your first choice, and perhaps you were more interested in a literary or an academic career. But I wonder, now that you've had all this experience and you've basically contributed a huge amount to society in so many different ways, what is the edifice, or in a sense, what you want to be remembered for having left the world with?
That's a tough question. I think I'd like to be remembered as somebody, not for my achievements so much, as being and I hope, somebody who has tried to be fair. I think that's very important to me. These are attributes I would like to be, I would like people to think about me: approachable and fair. And that I would hate it if they said that there was anything I did. And obviously all of us do things that we regret. But I would like to be remembered as somebody who was able to respect people and win respect and give respect. I think that's one of the themes, I think, very important for women, men, everybody. is what respect you give and then in turn receive. I think that's what I would like to be thought about for, not really that she did this or became that. It's been great. It's been a huge amount of fun. I've enjoyed everything I've done, and I'm very grateful for that because, there have hardly been any days where I said, oh, I wish I wasn't doing this. There's always bad days, but I've enjoyed it. It's been actually a lot of fun. So, and I've been very fortunate in the people that I've worked with who've supported me. I have to acknowledge that.
Okay, well, thank you. Well, that's been lovely talking with you.
Lovely.
These are great thoughts to end with, and thank you very much indeed. Thank you also to the communications group at SDSB. They've played a huge role in making this happen, and of course, we'll have more conversations with Changemakers. And thank you for the audience for joining us. And once again, thank you, Ms. Kamil. Excellent to have you. I hope you'll visit LUMS again, and we look forward to that. Thank you.
Thank you. Thank you for having me, and I enjoyed the conversation. Thank you.
Thank you very much. Bye, everyone. Good afternoon.
Bye. Bye. Good afternoon.